Monarch Networth Capital's Institutional Equity Desk has initiated coverage on Oriental Carbon and Chemicals, OCCL. This report is a result of MNCL's strong research philosophy and aims to showcase new insights with solid investment rationale on OCCL and how it is favorably placed in an oligopolistic insoluble sulfur industry. What is OCCL all about? Promoted by the J.P. Goenka Group of Companies, OCCL is India's leading and amongst world's 3 largest manufacturers of insoluble sulfur, which is a key raw material in tire manufacturing. OCCL has 34,000 tons per annum of insoluble sulfur total capacity and caters to marquee tire OEMs in Europe, India, US and China. Why does OCCL deserve a place in your portfolio? OCCL correctly preempts IS demand, expands capacity and steadily gains market share. Since 2006, OCCL has increased its market share from 3.5% to 10.2%. It is currently expanding capacity in its Dharuheda, taking the total capacity to 45,000 tons, which should continue the trend of increasing EBITDA per ton, market share gain, and better operating leverage. Pending domestic CV radialization to feed new insoluble sulfur demand. Commercial vehicles, which account for around 63% of the tire industry's revenue and around 53% of tire production in tonnage, has reached only 35 to 40% of radialization levels. Radial tires use more insoluble sulfur than bias tires. The pending CV radialization is expected to provide a fillip to new insoluble sulfur demand. OCCL weathers automobile and tire industry slowdown well. As the replacement tire to OEM tire demand is 60/40, automobile production slowdown leading to lower OEM tire demand is cushioned by replacement tire demand. Thus, as the vehicle park grows, the replacement market will also witness an uptick. OCCL is an excellent capital allocator with strong financials. Focusing on OCCL's financial performance reveals that it has consistently maintained EBITDA margin in the late 20s and return ratios in high teens. OCCL has been an excellent capital allocator and generated free cash over the years. OCCL has consistently paid dividends and doesn't shy away from buyback in case of high accumulation of cash. As the tire OEM demand picks up and complements the replacement demand, good performance is on the cards in future. And hence, OCCL can generate huge wealth for investors in the long run. MNCL has done differentiated work while covering OCCL, and the following points will further fortify your conviction. Why is OCCL the most dedicated insoluble sulfur player? A complete industry study of insoluble sulfur. High-quality insoluble sulfur industry is highly concentrated with just 3 major international players: Eastman Chemicals, Shikoku and OCCL. Insoluble sulfur being a niche product and high entry barriers deter new competition in this industry. OCCL's 90% of the revenue is derived from insoluble sulfur, while its peers have a very low percentage of revenue coming from insoluble sulfur. This strengthens our argument that OCCL is a focused manufacturer indulging in continuous R&D to better its insoluble sulfur grades. Valuations look compelling considering strong fundamentals. MNCL's analyst remains convinced with OCCL's long-term market share gain and secular growth story. Over financial year 19 to financial year 22, OCCL is estimated to report 9%, 10% and 16% CAGR in revenue, EBITDA and PAT respectively. MNCL initiates coverage with a two-stage DCF valuation target price of Rs 1,287, offering 29% upside in a year. The verdict is a strong thumbs up. Analyst credentials. Apart from company research, MNCL's analyst Anubhav Rawat has done extensive research on OCCL's international peers and the insoluble sulfur industry. For more information on OCCL and the industry, please connect with the analyst. Disclaimer. Please read the disclaimer carefully before making any investment decision.